Just as promised, I want to give you 5 IRS approved ways to maximize your tax refund. Hello, you got Mr. Smith, also known as Marcus, aka Cinco Smith. So depending on where you found this information may depend on how you reference me. Some people call me Marcus, some call me Mr. Smith, but a lot of people call me Cinco. So just to include it all, that's who you got. And I want to give you 5 IRS approved ways to maximize your refund. A lot of people don't understand the importance of the things that I'm about to say. So I want you to hold on to your seatbelts and definitely take heed to the information I'm saying. And then you determine whether or not you want to listen to the information, implement the information, or work with us directly so you can maximize your tax refund as well. So with that being said, let's go. First, I want to give you a disclaimer. Here's the disclaimer. Your tax pro from around the corner may not want you to know the information I'm about to share with you. So I want you to take notes and, more importantly, listen close. Listen close and take notes. And the reason why I say your tax pro around the corner may not want you to know this information is because it may step on toes to a degree. Plus, I know in many cases they're not telling you some of this information, and because of it, you come out on the short end of the stick. And oftentimes they say what you don't know won't hurt you, but a lot of times what you don't know will cost you. And your tax pro around the corner may not let you know how much it's costing you to not know this information. I also want to point this out. Not all tax preparers are created equally. Not all quote unquote tax professionals are created equally. And not all CPAs are created equally. And what I mean by that is a lot of CPAs don't even have a clue about the tax law. They have this fancy title and this prestige appearance of understanding tax law just because they have the title CPA. But most of them have no clue about how you can maximize in the tax area so you can maximize in your refunds, which ultimately leads to your wealth. But that's another video for another day. But take heed and listen close. All right. So number 1, I told you I was going to give you 5 ways. Here's the first one. This can help you maximize your refund if you understand it. Number 1, stop filing before you get your W-2. Now, I know that may not be favorable to some people, and I know that many of you are anxious to get your tax refund, so you're filing with your last paycheck stub and just hurrying up and rushing it in. I get it. I understand it. I grew up in a household where, my family did that as well. I didn't know what they were doing, but that's what was going on because you're anxious to file to hurry up and get it, and they tell you all you need is the last paycheck stuff. But what if I told you that by you just using the last paycheck stuff, it may be some things that you miss out on. It may be some credits that you possibly miss out on. It may be some information that didn't get fully calculated that you miss out on. It may be some taxes that you paid, meaning that you actually paid them throughout the year, but it didn't fully get calculated or was misrepresented in some way, shape, form, fashion that you miss out on. So by you not waiting for you to get your full W-2, and not to mention the other items that can go along with it, the other documents that may come in the mail to go along with the W-2, by you not waiting for those items to come in the mail, you miss out. And sometimes they don't come until February. Sometimes they don't come until the end of January. So just by being so anxious to file before you get your W-2, you mess up and lose thousands of dollars in many cases, over $1,000 just because you chose to file early. Now, I know it may have felt good if you got the return sooner, depending on, how the returns are working because they've been delayed for a lot of people. However, it may feel good if you get the return sooner, but you left a couple of $1,000s on the table and you're wishing that you had it a month from now, 3 months from now, or even later on in the year. So I want you to understand the importance of not filing before you get your W-2 because it's a good chance that you're leaving your money on the table. Now, the tax pros won't tell you this because they want you to hurry up and rush in because you're just a number for them. They want you to hurry up and get in so they can go ahead and process it, and you've agreed to whatever terms you've agreed to, and now here it is. You're in a position to where you filed prematurely and you left money on the table. Now, I know some people might say, well, I can just file an amendment. And that's true, but in many cases, the amendment may not be necessarily worth your time, or it can be, a hassle, a bit of a hassle. So it just depends on what you want to do, but I highly recommend against filing prematurely. Now, let's get to number 2. Number 2, consider investing in a 401k or traditional IRA. Now, I will say this is not tax advice. This is just based on things that I've implemented and seen people implement that has benefited them greatly. And the reason why I say it's not tax advice is because I'm dealing with an investment product. an investment vehicle. 401ks, traditional IRAs, those are investment vehicles. And in order to give advice in that area, you have to have your Series 6, 7, 8, whatever it is, in order to give that advice. However, I have seen the benefits of how it has helped people from a tax perspective. And this is just based on your preference, because different investment products operate differently. In other words, depending on what you invest in, you may still have paid taxes on that money on the front end, but on the back end, when you pull it out, you don't have to pay taxes. With these two scenarios, you can put yourself in a position to where the money that you've invested throughout the year that went into a traditional IRA or a 401k, it was tax deductible. When it's tax deductible, what that has done is lowered your tax liability. So yeah, you may have paid a certain amount of money throughout the year, but now that your taxes have been lowered, guess what just happened? It maximized your refund potential because you had a vehicle that you invested money that was tax deductible. And now they have to take that off of what they said you made. And that lowers your tax bracket in many cases, which heightens the amount of money that you're able to get back and lowers the amount of taxes you have to pay out. So consider investing in these vehicles and maxing it out to the best of your ability so you can maximize your tax refund. Number 3. Claim your credits. And I know this may seem like a no-brainer to claim your credits because most people are anticipating getting that child tax credit or even that earned income tax credit. However, did you know that about 20% of people do not claim their earned income tax credit, even though they qualify? And this includes those who are single with no kids, because earned income tax credit has nothing to do with having kids. So you can be single and still qualify for the earned income tax credit due to the fact that you met the threshold, the income threshold, to qualify for earned income credit, meaning that you made whatever number, the number range that they're looking for, and you qualify for the earned income tax credit. So make sure you're claiming all of your credits, because many people leave that on the table, and as a result, they don't claim it, and that could be money that they could have brought back into their refund. So make sure you claim those credits. Also remember the American Opportunity Tax Credit, and this is for individuals who have college students. That usually, it depends on what year you're looking at this, but that usually brings in extra $1,000 just off of your child being a college student. So do not forget to claim that credit. And many times, if you file prematurely, going back to point number 1, then sometimes you may miss out on some of this information because it has not come in the mail just yet. Number 4, claim the right status. Now, not all the time is it appropriate to claim a certain status, and sometimes people just don't know certain things. So I'm going to just highlight one as an example, but claiming the right status makes a difference. And I'll give a couple examples. But in this example, if you are single with one or more qualified dependents who live with you for more than half of the year, you are head of household. Sometimes people just say, I'm single, I got 2 kids. But that qualifies you for a different filing status. You're more than just single with dependents. You're single, head of household. And what makes you head of household is because you have dependents who qualify that you took care of more than 50% of their expenses for more than half of the year. You're head of household. Now, I want to point this out because so many people mix this up. You're not head of household if you're married. You're just not. You have to be single. You have to be unmarried in order to qualify for head of household. And you can't just be single taking care of your own house with no dependents. You must have both. You must be unmarried as well as have qualifying dependents who live with you in order to be head of household. So be sure that you claim the right status and just understand the power in there so you can benefit yourself the most. Last but definitely not least, and I got some more I want to go into on top of this, and then we'll wrap up and you determine whether or not you want to work with us or not. But hopefully you take some of this information and you apply it and implement it. And if we're a good fit to work together, great. If you qualify to work with us, great. There'll be some buttons below so you can get access to it. But I want to dive into this one because this is a very lucrative way for you to maximize your tax refund that many people don't realize. And I'll give you a brief story of how it helped me. But number 5 is embrace tax deductions. Now, I'm not just talking about the tax deductions that may come from your donations or your charitable givings or medical expenses, because oftentimes those deductions don't amount to what the standard deduction is. And I don't want to confuse you, but sometimes so many people say, I gave this to the church. I did donations. Well, the standard deduction is a high enough number that you have to have given a lot in itemized deductions in order for it to make more sense than the standard deduction itself. So I'm not just talking about those deductions because the standard deduction usually gets the job done for most people. However, I want you to embrace home-based business deductions. Why? Because they're the most lucrative. They're the most lucrative, meaning that it's so much range and it's things that you might already be doing that could lower your tax liability. And anytime when I say you lower your tax liability, that's another way of saying you position yourself to either maximize your refund, or if you're accustomed to owing, you position yourself to owe less money at the end of the year. And that's what most people want to do. They either want a larger refund or they want to owe in less. And sometimes people who are typically accustomed to owing, they wind up not owing at all and sometimes getting a refund off of this number 5 alone, having a home-based business. Now, what's going to be key as it relates to having a home-based business that comes with deductions is going to be record keeping. This might not apply to everyone, but just understand the importance and the power of it. So if this does not directly apply to you, if you're just an employee, you just have a job, great. Take advantage of all 4, and then you can click one of the buttons below to determine if you want to work with us and get in motion. There are 2 different options. One option will be centered around you going ahead and uploading your information, getting a free quote, as well as skipping the line and being able to get in the process so we can get you processed as soon as possible. The other option would be for the individual who says, you know what, I just want to hop on the call before I go ahead and upload my information and things of that nature. So if that's you, take your pick and decide, but one will get you ahead faster. So if you go ahead and go through the process of uploading your information, he'll let it get you ahead faster so we can go ahead and get in motion because we have everything that we need. May have some further questions and things for you to sign so we can take care of you in a proper manner. However, those 2 options are available. Now, let's talk about these tax deductions as it relates to a home-based business, because many people are doing something in this arena, they just might not realize it. Especially now, a lot of people are understanding the importance of not just having one stream of income. So you may be doing some things that could qualify you for tons of tax deductions. So let's proceed. I'm going to give a couple of examples. Now, this right here alone can be a all-day presentation by itself, just talking about home-based business and deductions and examples. So I just narrowed it down to about 5 categories. And of course, there are tons more. I didn't even talk about barbers and beauticians and people who are in the trucking and doing delivery services or doing Uber or, things of that nature, all of the delivery services that are taking place. Tons of different things that people are doing to earn side income, and they qualify for this as well. But it's going to boil down to the record keeping. How well are you keeping those records? Are you logging those receipts? Are you taking pictures of it, saving it in some type of spreadsheet? We got a tool that we use called the Cash Flow Manager. Allows us to take pictures of receipts, etc. So have a tool that allows you to keep these records, because that's going to be the only thing that separates you from everyone else. That's going to help you, help us, as well as the IRS is able to see, oh, this person has their records in the event of an audit. And the audit is not a bad thing. You just have to come with those records to show, hey, these are legitimate deductions. And I'm not going to put you in a position to lie for one or over-exaggerate or claim some things that you didn't do. You'll be surprised at the things that I hear and see as it relates to the things that people are claiming, and they didn't even have a business at all. But these are some of the categories I want to touch on. Now, this right here alone is what helped me maximize my refund, even though I didn't have any kids. Once I understood this, I was like, oh, I qualify for some tax deductions. I got back like over $7,000 with no kids off of this information alone. So these are the categories: network marketers, affiliate marketers, content creators, rappers, singers, and musicians, as well as influencers. Now, this is a new day and age. So all of these are growing industries. And as you can see, a lot of the tax deductions are similar. Many people can qualify for all of the tax deductions that you see. And many times 100% can be tax deductible, because these are things that are necessary and ordinary in order for you to operate your business, especially if you're in pursuit of a profit. So I want you to understand the power and the role that you play if you're in these areas. And I put network marketing and affiliate marketing first, because many people don't realize if you're in the network marketing or affiliate marketing, you qualify for a ton of tax deductions. People don't realize the power of network marketing and how lucrative it is in the area of tax deductions. And that's what we teach. So if that's something you're interested in and how you can maximize your network marketing company or your affiliate marketing company, or if you're a content creator or an influencer or a comedian or a rapper, a musician, we can help you in those areas. And that helps to maximize your refund like you wouldn't believe, all because of the record keeping and the education that goes along with it. So understand that the tax record keeping as well as the education and getting with the right person who understands it, because not all tax professionals are created equally. And if you get with the wrong person, then you leave a ton of money on the table. So that being said, we look forward to working with you and serving you. I want you to choose from one of the options below and see if you qualify to work with us, whether you want to go ahead and upload your information and skip the line, or if you want to set up a consultation and, have a conversation. That being said, either way is fine.